Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello everyone, happy holidays. Checking back in on the USMJ sector, and we have the sector differentiating itself. Some names are standing out as bulls and some as bears. And it's a little bit different because as the sector was running up into the election, they were really all trading very, very similar, but like I said, there are some discrepancies between them now. So we'll look at the lead bulls, lead bears. We're looking at MJNA, CBIS, NDEV, GRNH, TRTC, and HEMP. So we'll start with a couple names that are seeing some breakouts on the daily time frame. MJNA is one of them, and we can see the clear level to break for the bulls after the pullback from the election, sell the news reaction, lower highs and lower lows. We then formed a higher low and traded pretty much sideways, and this range was so very, very tight on low volume. It was all in between 11.4 and 12.5. And the last video I did, I think, for USMJ, we knew pretty much if we break 11.4, it's a bear break, and if we break 12.5, it's a bull break. So we got our bull break on increasing bull volume, which broke from that tightening pattern. We got a bull MACD cross along with it. So if you were waiting on this and watching it day after day, you had a buy order filled out, and the second the 12.5 broke, you bought in. We saw a breakout attempt, but we rejected from the upper Bollinger Band and pulled back. The consolidation low of that pullback after the rejection was 12.6. So that previous resistance of 12.5 then acted as support. We formed our base of consolidation, and now we're breaking out again and hitting higher highs. So you can see the increasing bull volume. That's exactly what the bulls want to see. The difference between last time is we are now breaking out above the upper Bollinger Band, so it is a true breakout, whereas last time we rejected from that level. We also had a significant break of 14.5, and that was the high of another bounce attempt. So we are over that level. The strong close at the end of the week over that level does look for continuation heading into next week, and as long as the bull volume keeps coming in, MJNA is the leader in terms of dollar volume that we see consistently. And on Friday, we saw just about $4 million traded over that. So that's certainly a significant amount compared to when volume really dropped off here, and we are breaking out. So from here, resistance, the high of the day was really 14.95. So we'll call that 15-cent psychological. If we can get over 15 cents, there's not a lot of resistance. The first one I could pick out would be 16.5. Then we're looking up at 18 and 20. So there is room for upside here. If this bull volume keeps coming in, we're going to keep breaking out. And as long as we keep closing above the upper Bollinger Band, we will remain in breakout mode, and we'll see how significant the bulls can make this move here as the upper Bollinger Band drives the price up with it. Weekly time frame, the significant bull break occurred, getting back over the 200-week moving average resistance. We can see the initial bounce attempt rejected there for 2 weeks, closed above it, and then we got our continuation. So the bulls are in absolute full control on the weekly time frame, and you can see over the past year it is a very, very strong uptrend. We do need to zoom out and see where we stand compared to the run back in 2014, because we do have resistance above where we currently are trading. So those resistances I just pointed out up to 20 cents, then we're looking up to the high of this move, 268, and then we have to look back to 2014, and we're looking at 35 and then up to 479. Obviously, if we get above 479, it is very, very, very strong, but we need to be looking at historically what happens in January. And I've been trading for 6 years, these US marijuana stocks. So let's zoom out to the 6-year chart and see how it has played out. And I want to get a little bit more room here so we can see it more clearly. We'll start with 2010 when California first voted and failed to legalize recreationally. That's when I first became interested. And look at what happened 2011. So January and February did not see much upside. We did see a bounce in January and a bullish reversal candlestick form. So there was some upside in January, but the breakout really occurred in March of 2011. Fast forward, we have a bounce in December of 2011. Then January and February, we get a very strong run for MJNA. And you can really look at MJNA as the sector leader for the USMJ. They are the OG from back in 2010, one of the original names. And like I said, that dollar volume, the fact that it does still see such significant dollar volume in comparison to other names, does have it as a standout. So we've got January and February breakout on 2011, 2012. Then we look at 2012, 2013. Look at December, January, and February. Breakout again, very strong. Fast forward 2013 to 2014, December and January, breakout. Fast forward, did not see that happen in 2015. We did see a green month in January, an attempt at a breakout, but it didn't play out. And then in 2016, green on February and March, a little bit of upside February through April, but not much of a significant bounce in 2015 to 2016. So what does that tell us? There are some mixed results in there, but more often than not, we do see a run to start the new year. And we are in an uptrend now, and we can see last time we bottomed out in the new year, the breakout started, and then the next year later, 2012, 2013, the breakout continued. So here we have the bottom out in 2015, 2016. Now we have continuation, so the momentum is favoring the bulls as we head into January and February. Last time that was the case, we saw a big-time green month. So not saying that will happen again, but looking at what is most likely to happen historically, the fact that we already have bullish momentum heading into the new year certainly bodes well for the long-term patterns that we've been seeing over the past 5 or 6 years. We have all those resistance levels to be watching. We have a clear higher low, and we need to get some higher highs by breaking above 479 and 50 cents, and that would be hugely significant for the long-term bulls if that were to occur. But as of right now, we're looking up at those resistances up towards 20 cents and 268. One step at a time, need to get over those levels. So CBIS is also breaking out very clearly above the upper Bollinger Band, and the trend changed here where we have our clear lower high, lower low pattern. Then we formed a base, a breakout, more of a base, higher lows, lower highs, got very tight here. And to end last week, you can see the bull volume showing up in a big way, breaking out above the upper Bollinger Band, and some significant continuation. So resistance here for CBIS is 573, the high of Friday. Then we're looking up at 684, and then up to 707. And we also have the psychological levels mixed in there. 6 cents even is going to be resistance. 7 cents even is going to be resistance. But we're looking to break these lower highs, and if we see a break of 077, we know the bulls are in absolute full control. And we look at the weekly time frame, and this is normal healthy consolidation that has been occurring on CBIS after the breakout. We back tested and held the 100-week moving average support multiple times. We've got all weekly moving averages back as support for the first time since the top of that breakout, and we have a higher low, which is what's most important. Since March of 2016, the uptrend is very clearly still intact. And if we see a break of 7.7, we are looking back towards 2014 levels for our next resistances. We do still have a lot of work to be up at those resistance levels, but we're making some nice progress, and the U.S. bulls do have some hope. Need to be keeping an eye on the Canadian sector as well. The money flow, in my opinion, between the Canadian and U.S. sector is definitely worth keeping an eye on. When money was flowing out after the election, out of the U.S. sector, it was pouring into the Canadian sector. Now we see the Canadian sector consolidating, and we see the U.S. sector seeing a little bit of a breakout on some of these names. So certainly worth watching overall where the money flow is going. And obviously the bulls want money flow coming into their market. NDEV, a new name here, but I really like this chart. We had one of our members really pointing it out, and he did a great job because it's obviously an extremely strong chart. And over the past 3 months, it's been nothing but higher lows. We broke out, we consolidated, not much of a dump, not nearly as significant as we saw after the election for those other names. Pretty much just sideways trading on no volume. And then the bull volume shows up, we break out, consolidate and form a higher low, and then we break out big time to end the week on Friday above the upper Bollinger Band. That will be a key resistance going forward. I should say a key support. Update the upper Bollinger Band for MJNA, CBIS, and NDEV at the open each day. And as long as we keep closing above it, the bulls are in control of the short term. So resistance is 105, the high of this day. And what's so exciting about NDEV is you look back and it doesn't have the extensive history that a lot of those other names have over the past 6 years, dealing with dilution and shares hitting the market and an overall downtrend since 2014. We're in an uptrend since 2014, higher low, and now a higher high. Getting over 50 cents was very key for continuation, and we rejected from that on the initial move to the upside. Normal, healthy, bullish consolidation on decreasing bear volume, and then the bull volume pours in as we continue to the upside. So after 105, where's the next resistance from here? We need to zoom out at pretty much the entire history of this name, and we're looking up at 150 as the next resistance from here. So 105, 150, bulls would love to hit blue sky breakout, but that's going to take a while because there was some price action back before there was any volume in NDEV. We did get up to 290. So there is some price action at 290. It's very little price action, 20 shares traded. So the volume was very insignificant up at those levels, 32 shares traded. So really not much price history at all, which is why we see the lack of resistance. And if we can get over 150, I would consider that blue sky breakout due to the history and the lack of volume at those other higher levels. So NDEV bulls in full control of the trends, and it's certainly a more longer-term bullish outlook because we're not dealing like MJNA and CBIS. We have all those 2014 resistance levels to deal with. Not so the case for NDEV. GRNH, bulls are trying here, but they're not seeing the clear breakout. They did see some upside with MJNA and CBIS to end this week, but clearly we're not breaking out. We're still in a tightening range. We're trying to turn this trend around after all that election consolidation. We've got our high on the bounce attempt, higher low, higher high, now another higher low, and we need to see a break of 865 for the bulls to continue this little uptrend that has been underway for the past month. So 865 clear resistance. The Bollinger Bands are in the way. They need to quit tightening and start expanding, which they are going to begin doing, and creating some room to the upside because we have rejected from that upper Bollinger Band on multiple attempts the past couple of weeks. So 865, key support the bulls really, really want to hold is the low of this consolidation of 0.065 and 0.0651, a bit of a double bottom at the lows of this week. We look at the weekly chart, and GRNH does still have a nice bullish uptrend in 2016. Higher lows, higher highs. We can see after all these rejections from the 100-week moving average resistance, a half dozen rejections in the summer of this year, and now it's acting as support. So that's the ideal scenario for the bulls, holding the 100-week moving average on multiple tests and trying to turn this trend around back towards favoring the bulls. But we do have a lot of work to do. We can see all these resistance levels still here from consolidation, whereas MJNA and CBIS are a bit more ahead of the game in terms of recouping from that pullback after the election. So GRNH, a bit of a laggard, certainly still seeing resistance, but the weekly chart definitely favors the bulls, and we're heading up towards resistance of that 865, and then we would be looking at the 200-week moving average, currently around 11 cents. TRTC is a lead bear. It is very significantly struggling compared to everybody else, and we didn't see the upside Thursday and Friday. So that's a red flag right there. We have our low from the dump on the election. Higher low, very, very weak. Took a long time to form. We did form it at 25 cents, but we haven't broken the lower high pattern. We see resistance at 372, 327, now another one at 30, or I should say 32.7, all those levels I just said. So a resistance at 30, and we have to break 30 to break the lower high pattern in the short term. And the middle Bollinger Band resistance of 29 cents is rejecting the price. So the bears are absolutely still in control of TRTC. Bulls are trying to turn around the trend, but they are struggling. We have a lower high and a higher low, so these weekly charts are showing a tightening range is forming. And bulls really want to hold this middle Bollinger Band of 24 cents, which we did bounce off of last week. Need to continue holding that going forward. And just seeing this range tighten up, we should see a clear break, but that could honestly take place in a year from now. And this is actually the monthly chart. Okay, that makes sense. You go back to the weekly here for TRTC and zoom in. So it does look like this key support is on the verge of being lost, and I do want to zoom in a bit more. It's the 200-week moving average, and we've been seeing a lot of play on consolidation bouncing off these levels, and we're still holding it. We're right at that level. That level is 27 cents. So it is a bullish reversal candlestick on the weekly. We need to confirm it next week and keep holding this 27 cents level. If we lose it, we have a double bottom of support, 222 and 221. Last thing the bulls want to see is a break of those levels, because we would see another leg to the downside on a loss of that key support. So ideal scenario, hold that 200-week moving average and confirm further upside from here. Worst case scenario for the bulls, lose 221 as support, and that's 0.221. Last, we've got hemp. Hemp is a lead bear as well, but it is attempting to break out. It is seeing that increasing bull volume. We did, however, reject. We've got all kinds of resistances. The 50, 100 week, or excuse me, day. We've got the 100-day moving average and the upper Bollinger Band at the same level, 31 cents. And that's where we rejected from the high of Friday. So a significant difference when you see names like MJNA and CBIS closing above the upper Bollinger Band and breaking out, where hemp is rejecting. Hemp still has a tightening range forming. Consolidation low from the election, double bottom at 2.6, still a lower high pattern, and we are getting a bullish break, but I want to see the bulls get over 32 cents, or I should say 0.032, because that was a little double top on the high of the last bounce attempt. High of Friday, 0.031, so still seeing that resistance. If we can get over 0.032, we do break the lower high pattern on the daily, and that is step one for the bulls to break out. And you can see it's lagging behind because we still haven't broken that high from November 23rd. And we look back at MJNA and November 23rd, that high was broken long ago. And it's very interesting now. I've been doing these Canadian MJ sectors, and November 23rd marked a dump day on Canada, and it dumped a low of a dump day. And we see a breakout day on US. So a dump day low in Canada and a breakout strong day in the US. Very curious to watch the correlation, the inverse correlation between these two regional sectors. So to sum it up, we've got NDEV as the strongest bull on the daily, the strongest bull on the weekly due to lack of previous resistance, and the bulls are in full control. You want to be very careful trying to enter positions up here because we are overbought. I would say the upper Bollinger Band back test as support would be a potential entry point for a short-term move to the upside. You would just want to, at this point, with being so broken out, you would either want to wait to consolidate for a long-term position, or if you entered without significant consolidation, you would want to be pretty protective of that position and ideally put a stop loss at break even if you could. So NDEV is the lead bull in my opinion due to the lack of history. MJNA, the sector leader, is also a lead bull with CBIS due to breaking out above the upper Bollinger Band on the daily and heading back towards those levels that we saw on the breakout before the election and the votes came in. And the laggards, we've got GRNH in the middle of the road compared to everybody else. TRTC and hemp, clearly some laggards and seeing the most weakness out of the names that we just covered. That's the wrap. We'll see how much continuation we get next week. Very, very curious to see how the start of the year goes and if we get this continuation bullish breakout that we have seen in the past. I appreciate you watching. Very happy holidays to you and yours, and we'll see you soon.